Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here with a Forex market analysis for the week of January 17th through the 22nd. So we have a lot of interesting trading signals going on in the market. So real quick, let's just get to our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And just to let you know also that please, if you subscribe to our YouTube channel, if you have not already, Forex Trading Unlocked. And also, there's a book called High Probable Japanese Candlestick Patterns that I wrote that right now, if you go on Amazon.com, you can get the Kindle version for free for 1 month to check it out. So that's available today and today only. And there's also going to be a bunch of high probable Japanese trading candlestick patterns that we're going to be going over. So right now we have the forex-trading-unlocked.com website pulled up, the workstation page. And we have the dollar index, which check this out. So we had a buy signal the other day, a bullish engulfing line buy signal. Now, what is significant about this signal? Well, it's one of the strongest signals that you can get after especially a long trend in either direction, going up or down, as far as being an engulfing line. Now, where is this going to go? How much of an impact can this have on the dollar index? Well, let's just take a look at this last high up here and bring it down to here. And let's pull up just on a Fibonacci basis. If we go on a Fibonacci basis from this last low and we get a decent correction in the dollar, which remember, the dollar has been beaten up for a very long time. And I know that I am not necessarily a dollar bull, but when you've been going down for basically a year, usually you get a nice little corrective bounce. We've had a couple, but not very strong. So anyhow, right now we have this little target area that we're fixed on right now. It's for our upside target zone for the dollar index. So this is our 50% level. This is our 0.618 Fibonacci line. From this current big wave down, we have this bullish engulfing line. Now, if you read the book, High Probable Japanese Candlestick Patterns, this is not how you set your targets. This is a longer range, kind of just a trying to figure out how an index, because this is not an actual currency, it's the weight of the euro and the pound predominantly, and then obviously all the other global currencies. So speaking of that, let's get into it and see what kind of signals we have going on right now. All right, so we have the euro, US dollar. We had a bearish engulfing line sell signal that was triggered a little over a week and a half ago, and Friday of this prior trading week, boy, did the market end on its butt. Now remember, we have a holiday market in the United States where we have some limited trading for certain markets on Monday. So as the world comes online on Sunday for the Asian and European markets, it'll be interesting to see how much volume and volatility we really have in front of that. So I would expect most of your trading action to occur probably from Monday night into Wednesday as we head into the inauguration in the U.S. After that, then we'll see once the inauguration is over what kind of reaction we get in Asia and Europe with their markets, and that will probably set the tone for the dollar for probably at least a couple weeks for direction. But right now we have this bearish correction. We've taken out this upward sloping line. Now remember, the euro US dollar had a big move. I mean, from November up into the beginning of 2021. It had a move from $1.16 all the way up to $1.23 plus. So that's a huge move in just a short amount of time. That was a bigger range, or more volatility and more of a range in that 2 month period than we had in the whole year and a half before 2020. So the market is definitely swinging, and this is why you're getting a big kick in the dollar index. So you've had a nice move in the euro versus the dollar already. It's a 3-handle move already, and it's hanging on support. Now, this upward trend was pretty steep, so I think where we're coming in, especially at this target 1 in the downside target range of around $1.1975, this is most likely where you'll see most of your support come in, at least as far as the way we're looking at things right now. Now, this target number 2 here, $1.1889, I think that's most likely going to be the extreme for any type of sell-off that you have currently, just because unless we got to get through the election and whatever. So the next couple days, I think there's a good probability that we could hit this $1.1975, but I think that absolutely target 2 is going to be the extreme for any downside correction in the short run. Because remember, this is overall a bull. We're looking at a corrective move right now. We are not looking at this as a change in trend. So we have the dollar index that is giving us a buy signal. So that's overall, as far as the index against most currencies, that's giving dollar strength. The euro US dollar right now is showing us for sure lower move lows and lower move highs on an intraday basis, which confirms the short-term trend is bearish. Intermediate term and long-term trend obviously are bullish, that's why we are looking at this as a corrective move. A short-term top obviously is established, and we'll key off of this high up here also as far as our breakout level to the upside. This is our risk right here. Anything above here, it is a major bull again. Okay. All right, so that's for our euro US dollar. Now let's go on to the British pound US dollar. Now the pound, interestingly enough, topped out 2 sessions ago and was not chasing the dollar bulls or running from the dollar bulls like the other markets have. So, but we did have a bearish engulfing line sell signal to end the trading week on Friday. We have 2 downside target areas. This initial $1.3423 down to $1.3351, I think, is the initial support where it definitely has us in the short-term bearish mode. Intermediate and long-term are very bullish for the pound US dollar, but with the increased lockdowns, this may be the beginning of a corrective wave where we're going to start to be neutral to lower. And even though there may be dollar bears out there, I think that we have to see how the transition of power happens in the US this week, but the lockdowns aren't ending in the UK anytime soon. At least that's the way the news was looking this weekend with the surge in the hospitalization rate. So hopefully that does start to subside a little bit, because that would be good for everybody and the people. We don't want people getting sick, but right now the way the numbers are looking, I think that's going to weigh on the pound. We've gotten into 2021. Post-Brexit deals have pretty much come to fruition. Now it's everyone trying to see how they can stay healthy and defend against this unseen virus. So, all right, now let's look at the US dollar Swiss. For the other case in the European trading zone, this had a bullish engulfing line buy signal over a week and a half ago, just like the euro had a buy signal or for the dollar versus those currencies rather. Right now, this is trading under a key pivot level here at 89.23. I think you're going to see a lot of resistance and jittering there. If you see a huge sell-off in the pound, especially and the euro, then I think you'll probably have a good chance of piercing this key pivot level. Closing above it and sustained trading is really necessary though. So it may be a grind. You got to look at this. We have this low back here. This could be an interference level right here. I would be very cautious right here. This could be very tough to sustain a trade to get through here. So we may spike at this initial 90.26 target zone, but unless the dollar really gets a raging bullish move against a lot of other currencies, I think the Swiss is going to hold pretty steady, and we'll see how that manifests over the next week. It's going to be interesting. Like I said, this week we have a holiday market. We have the transition of power also in the U.S., so it's going to be definitely interfering with global liquidity over the next few sessions, but we have lots of opportunities. Now let's look at the US dollar JPY. Once again, we have another reason why the dollar index is bullish, because we have a nice bounce in the yen. The US dollar yen has been nothing but a bearish trade for quite some time. Let's make this a little clearer. So as you can see, it's been trending, making lower move lows and lower move highs for quite some time. So what we're going to do is we're going to have to key off of this high from last week. If we can get above this level here, then that confirms strength and higher move highs, which would have us targeting this upside target zone here. 105.36 here, I think, is where you're going to start to run into a lot of resistance. It's going to get really toppy and choppy here. If for an extreme, I would say 106.23 is going to put a cap on any corrective move here. Now, does that mean that this market is getting ready for a turn? No, but like I said, the US dollar is due for a nice correction. So this would be a good area for the dollar and the yen to pretty much run out of gas in if there's an extended correction. It may not get there, though. This may right now just be establishing a lower move high. If we get into this upper part of the target zone, that would be higher move highs, confirming at least a neutral market. Overall, we are not bullish the dollar versus the yen in the short to intermediate term, at least right now. There's no real reason to even think about any change in trend. And it has to do more with global politics and everything else because we're pretty stable with Japan. Interesting here, Australian dollar, US dollar is finally starting to show some weakness. We have a dark cloud cover sell signal that occurred just a little over a week ago. Right now it is hovering below these lows. So this is tough. Australian dollar, US dollar has some things going for it as far as variables of pricing that doesn't really exist in a lot of other markets. One of the biggest things that Australia has going on right now is there's a boom in the commodity markets, especially in a lot of precious metals and ores that Australia produces. So with the global demand increasing for a lot of this stuff, and with China coming back online, if they truly are producing an output that they say they are, that's strong for Australian economy. As long as there's no big lockdown measures that come into place and their trade with China it continues to flow, it's going to support the Australian dollar. So short term here, we are a bear. We're going to take this here from the high, and we're just going to go down to right around here. And this is where I think you have to just look at this on a basis of this. We're going to put here at the 50% line, and then we're also going to take this a little bit lower, and we'll bring it down to here, and we'll bring it down to this 50% line. So we're just going to give you two downside targets here for this market. It's very hard to say that this trend is going to really be broken for any extended period of time, just because of how bullish it is. And it's not just geopolitical issues. Now, as you can see, it's hovering along this slope here. This is not the steepest slope right here. It's fairly level. By attrition, we're coming through it, not just by breaking markets. So I would say that you're probably going to see the bulk of your trading in this area. Let's move this over here a little bit. Oops. Okay, I got to bring this in. So pretty much here, where we're in this little zone here, that's only because of the fact that the CRB is holding up this market. If the CRB starts to fall apart, if you start to see gold and silver really start to tank, if you see oil really start to fall back on its lows, if you see especially a lot of the food is also something, grain markets and stuff like that impact them as well. If we start to see a correction there, then I think you'll see weakness in the Australian dollar for a nice corrective slide. Unless there's major dollar strength that comes in for whatever reason that really rams all the currencies, this is one where we're not looking for a lot on a correction. Now let's look at the New Zealand dollar, US dollar. We have the New Zealand dollar, US dollar. We have a dark cloud cover as well. This market here is not on quite the same campaign as Australian dollar. Reason being is that they're not so reliant on China trade as Australia. The slope of this market also is not too bad. By attrition, it would be coming through it, which it has. It has made lower move lows as of Friday, and this is also a very powerful selling day. So I think that what you're seeing here is a little release. This downside target area with 69.14 pretty much being the buffer. I think you're going to get choppy down here. If you're short and you can hang on to this first target level, I would say take your profit and don't get greedy on this one. Now, like I said, if there's a huge dollar strength surge for some reason, that could hammer all the other currencies and blow off a little bit more of a volatility to the downside. But that's only if you have a real strong resurgence in the dollar, which I don't think that's what's going on right now. I think right now it is just a corrective rally in the dollar, which it's every top and bottom starts as a correction. But right now, because of the trend, the overall trends, they're telling us that right now it is just a correction. So let's look at this area right here for any selling pressure to kind of really unload. And one of the key levels to really watch out for, I think, would be this last low here. If we fall through here, you got a good shot at hitting this. If it gets below 70.05, 70 even, basically, you got a good shot extending the downside momentum to 69.14. Aggressive bears, 68.22, but keep your stops tight. And once you get down to 69.14, definitely use 70 even as your risk to stay, because you do not want to be long in case you get a slingshot back. This market could be, here's the thing is too, is if this is only a dollar correction, which it's being viewed as, once it does start to bottom, just like you can see now how it really turned really fierce, all these currencies gave signals within days of each other and are all helping to lift the dollar index right now. It's because it's been beaten down for months. So we'll see how this manifests over the next couple sessions in the next week, but that's really where we're looking at right now. Now let's look at the North American trade zone. US dollar, Mexican peso. We got spring break coming up. I'm sure lots of people are wondering, like, is it going to be cheap to go down to Mexico? I don't know. I'll be lucky if we can go to Mexico. First of all, we've got to hopefully get everything opening up. But what we do have here is a bullish engulfing line buy signal that happened. The low from the prior day is your risk level down there at 19.60 pesos to the dollar. This market could really go sideways for the next couple months, and it would not be surprising. We have a buy level here of 20 pesos, or even basically. Right now, it's a losing trade, our risk, but it did not fall through our risk level. So right now, we're still long this trade. We're looking for another rally up to this lower target zone, around 20.5 to 20.79 pesos to the dollar. It would be not the hardest thing to achieve. So if the dollar continues strength into the next week or two, I would think that you're going to have a good chance at seeing this upside target zone be reached. That's probably all you're going to see, because then we're coming into spring break time, and like, let's put a little vertical line. Let's just go from mid-March into the end of April here. This here is spring break time. So from here, I would say you're most likely going to see us buffer off this upper zone here and then stabilize around 20 pesos to the dollar. So we do have a buy signal in place. Aggressive bulls right now, you don't have very much risk. You can buy the peso at 99.77 and you're risking 99.60. It's not a lot. So for aggressive bulls, you're getting another chance to buy in at this buy signal. One thing about bullish engulfing lines or engulfing lines in general, where they get you into the trade, you've already hit a big gush. So sometimes the market retreats and gives you a second chance to buy in before we take out another wave higher. Now, one of the key levels to watch out for is the high from last week. Anything above here confirms our upside breakout and our buy signal and has us pushing into this upside target zone. So we'll see. Once again, it is going to be a holiday market starting off the week in the United States, which will probably slow things down. US dollar Canada, look at this on Friday. Finally, a bullish engulfing line buy signal. Now, this is where I really am starting to say that you probably want to watch the dollar continue its correction kind of in a grind of a way for the next few sessions until we have the inauguration pass. Once that happens, who knows it's going to be very volatile. But the short-term trend in this holiday trade, I would expect this little bullish buy signal to happen on Friday to get some follow through into this key resistance area. We have this last high from last week that we need to get above. This $27.90 to $28.30, I think, is the huge area to look at with this key pivot, which is just above it. So if we can get above here, which I think it's going to be tough, this could be what holds back this bounce, and this we go sideways. But the U.S. dollar Canada has been in a free fall for a while. A breach of this area, this key resistance area, definitely would have us on a rally campaign and looking for a corrective move that extends all the way up to $1.30.06. And then it'll probably be touch and go if there, like I said, if there develops a very major bullish move and momentum and across the marketplace, then you might see some of these signals hit extremes. Otherwise, I think you're going to stay at some of these lower target ranges first. Let's see how they react, and then look for further follow through after that. So once again, the Euro US dollar it's when it started all this stuff, it's the biggest weight in the dollar index. And as you can see, these other markets are coming in line with that, where they're starting to pull back versus the dollar. These could all just be profit-taking corrective moves. Remember, right now we're not looking for a bottom in the dollar and a big dollar bull to come back. We're just bullish the dollar in the short run as we head into the next trading week and into the transition of power in the U.S. Once we get through Wednesday, and it will be, a crazy week for sure. But after this week, you're going to start to see stabilization. We will be able to start to have direction for sure, because the election is over, the transition of power is over, and then shabam, we can get back to just focusing on currency movements, geopolitical things. Brexit's over, folks. Remember Brexit? We talked about that for years. So we are done with those topics. We are moving on, which is nice. And remember, once again, since you listened to this presentation with all these high probable Japanese candlestick patterns, check out the book on Amazon.com in paperback and Kindle versions. And to thank our listeners who are checking out this video today, Sunday, January 17th, you can get this book for free in Kindle version for 1 month to read. So check it out at Amazon.com. We really appreciate your time. Once again, this is Teddy Keckstedt from Forex Trading Unlocked. Good luck with your trading, and we'll